Hi there, this is Steve Marley, the Market Chartist here on behalf of forextraders.com, and we're now going to take a look at both the US dollar versus the Canadian dollar and the US dollar versus the Japanese yen. The US dollar CAD dollar certainly exhibiting a more bearish theme in here and staying negative throughout for February, a little bit more erratic for dollar yen, which we'll come to shortly, but still we see the bias of risk in here for a more bearish theme, potentially setting up for dollar yen as well. So dollar CAD first of all, very sideways in here through February, but this previous sell-off we saw through early January and then into late January, initially through 130.77, that neutralized bearish pressures and actually did create a double top pattern in here, but then the subsequent break below 129.96 set up a more negative theme in here, and we do see threat on an intermediate term outlook for late February and beyond into early March in here for a more bearish theme to come through again for dollar CAD. So certainly a more negative setup there. If we take a look at dollar yen, not quite so negative. Yes, the sell-off in here for January was negative and neutralized bearish pressures and bullish pressures from this whole November-December rally. But then we now see a range theme in here, and we saw this important level at 111.36, which the market held here at 111.58 in early February. So a range theme between 111.32, and 118.65. That's the important range environment. And despite the little rebound we saw in here through the middle of February, a breakdown last week in here does resurrect risk. So within this range environment, although very much neutral going into late February and maybe early March, the skewed threat is for a challenge to 111.32 back through 111.58, and should we break 32 in here, it will see an intermediate term shift to a more bearish outlook. This has been Steve Marley, the Market Chartist, on behalf of forextraders.com, and I wish you a great trading week.